Good morning, everyone, and thank you for joining us on Morning Markets on Thursday, the 15th of February. Today, we'll just reflect a little bit more on how markets performed with the better inflation data in the UK and also look at GDP numbers for the UK and Japan. As George discussed yesterday, the UK inflation backdrop was slightly better than market had been looking for, coming in at 4%. And certainly that helped sentiment in markets, particularly sovereign bond markets yesterday, with both gilts and global sovereign bonds trading in, so yields coming down. And remember that yields move inversely to price, so the price of bonds rising as a result of that. I think the other point to bring out then today is looking to the GDP data that we've just received for the UK. And again, it speaks to the challenge that really the Bank of England have faced in terms of that lack of growth. And yes, while the fourth quarter is a negative GDP number, I think actually focusing on the full year of 2023 is more instructive and just really highlights the challenge that the government today face and future governments face in terms of that anemic growth backdrop for the UK. If we look at the full year of 2023, growth came in at 0.1% compared to 2022. So basically no growth, and even more so if we look back to the period post-COVID and the recovery. Yes, we had a very significant recovery, but the economy itself has effectively flatlined over that period. And that was very evident in terms of the fourth quarter numbers, where each component part of growth, if we look at in terms of services, we look at investment, etc., were weak over the period of time. So something certainly to focus in on there for government and for policy action. It probably doesn't change materially the Bank of England's view on interest rate trajectory. The market over the course of the week has probably now moved to price 3 interest rate reductions in the UK of 0.25%. It was probably closer to 2 to 2.5 at the beginning of the week. Also today we had Japanese GDP data for the fourth quarter and indeed for the full year as well. Much like the UK, it's experienced 2 quarters of negative GDP growth, termed as a technical recession, but it's only a word really, isn't it, in terms of the backdrop, given the small numbers that we're talking about. But it does, from a Japanese perspective, I think, pose an interesting challenge for the Bank of Japan. A lot of the discussion that you'll have heard from ourselves and from others is around the potential change to interest rate policy, the end of yield curve control in Japan. I think having 2 quarters of negative GDP growth will certainly push that decision further out. We've seen that over recent weeks if people have reappraised their view, but also the yen, the Japanese yen, has weakened and has continued to weaken over recent days as well, given that slow backdrop. I'll leave it there for today. We'll be looking out for US retail sales later today, but also UK retail sales tomorrow morning. Many thanks.